Welcome to SaaS Backwards, the podcast that looks at what's working and what isn't in the world of B2B SaaS. This is the second episode in our new series on the impact of artificial intelligence on the SaaS industry, where we're unpacking what AI really means for builders, sellers, and buyers of enterprise and departmental software solutions. In our last conversation, we explored how agentic AI and no-code tools are rewriting the SaaS playbook, lowering the barrier to building software and calling into question how much value SaaS vendors really own. Today, we're diving a little deeper into the world of agents, what they mean for SaaS, and what opportunities they present, like voice, which we'll cover on next week's episode. Today, we'll be asking questions like, how close are we to a world where we don't have to click through dashboards, but use natural language to drive SaaS apps? Something like Captain Picard talking to the enterprise? And what happens when agents are capable of initiating workflows, handling escalations, or even rewriting business logic on the fly? To explore these questions, I'm joined by two brilliant minds. James Ollerenshaw, a marketing strategist with deep AI experience and healthy skepticism earned from watching more than one hype cycle play out, and Rob Curtis, co-founder of Heroes Studio, a venture builder working at the cutting edge of agentic AI and a frequent chronicler of this moment in tech via his Substack. I'm Ken Lempit. I'm your host, but today I'm going to turn hosting responsibility over to Rob Curtis. And Rob, take us into the episode.
James, Ken, great to be here talking about what feels like the future, but is candidly happening right now. This week, we're talking about agents. Agents have been in the news this week quite a lot. And I wanted to share two stories that give very different signals about agents, but I think perhaps present both cautionary tales and some optimism for this audience. I don't know if you saw the ads, "Stop hiring people." Large billboards, Times Square, SF, they went viral. They spoke to the deepest fear of being replaced by our own creations. Well, that company, Artisan, has just raised its next funding round. There's a lot of conversation going on at the moment about how we can take out more human cost and replace it with more automation. At the same time, 11x, maker of more synthetic human workers, especially SDRs, has been sued by ZoomInfo for using their logo at the end of what I believe was a failed pilot. They're also being looked into after allegations have emerged from their staff that they've been inflating their retention numbers. The company is saying something 70s to 80% retention, and their staff are saying these are significantly below that. Why does this matter? Not only are we all in the market for SDRs, but it tells a story about what investors are investing in and what the world is looking for, which is more effective ways to use the tools to achieve the same outcomes. And that's going to affect software creators like listeners of this podcast. Like you said, Ken, starts to feel like the Star Trek Enterprise is upon us. I love the idea of using natural language. We trained ourselves to talk like robots to Google. Restaurant near me, Vietnamese, vegan. Nobody talks like that. With the rise of LLMs and chat interfaces, we are starting to talk again like humans. Ken, you've been around a while through the world of SaaS. We are now in a world where natural language allows us to operate our SaaS products, potentially initiate new systems, log in, make payments, do a whole range of things in natural language. One example is the difference between looking in Retool for your data versus asking a simple question, analyze Q4 performance. Ken, as you look around your clients and this industry, how ready do you think SaaS providers are for the world of natural language?
So I think a lot of this depends on where they are in their development and who they sell to. We're working with a client in the manufacturing software space, and their product was built decades ago. The original code is probably 20 years old, and it's being reinvented on an AI native platform. The most exciting part isn't the dialogue-like interface. It's a pretty plain Jane interface to operate the mainline function of the system. It is actually the ability to inquire of this very complex data set in natural language. Companies prepared to reinvent themselves or are in launch at the moment are the ones that are going to be most likely to lead with these natural language capabilities. And it's really exciting to see data able to be accessed in ways that were unimaginable only 2 years ago. Like you could not imagine doing what you can do today in a command line or chat interface. There's going to be opportunity where folks have great data, like their data model's solid and they can reveal their data to an AI interface. And I think the posture is going to be most aggressive with young companies either reinventing themselves or starting fresh. Though, if you have a great data lake and you're willing to expose it to an agentic or natural language interface, maybe you can have stuff that's just as exciting as what we saw only a couple of weeks ago in this startup client's demo.
Thanks, Ken. That's super interesting. And James, you're one person that often reminds us of the expectations of enterprise buyers, and in particular around things like accuracy. In a
Mhm.
world of natural language versus a world of, say, command prompts, it's going to be really interesting to see which of those is most capable of bringing out the most accurate instructions to lead to the best results. What are your thoughts?
Before I go into that question, I want to go back to what we were saying about us entering the world of Star Trek and the Enterprise, talking to the computer in natural language. I think that's an incredible thing to have happened. That show, 30 years old or something, and it was real science fiction to say computer and have this conversation, the computer able to converse back and help us solve problems. We work with the computer in real time using natural voice. Ken, you set me up as a skeptic here. I have been through a couple of hype cycles with AI and see where this can be a challenge. But I'm a great enthusiast for it. I've got my Star Trek necklace on. So I'm all in on this kind of future working, but it's got to work. Does it work effectively? If you're in an enterprise and you have a process, that process needs to be reliable. What we see with the latest wave of AI is that it is not always reliable. It hallucinates. It interprets instructions different ways depending on how they're expressed. We see that in typing into chat GPT interfaces. Now we're able to talk to the computer. That creates more scope for variation in how we create those commands and even more scope for variation in how the computer responds. That can be wonderful, but when trying to get consistent outcomes, it's not always helpful. As we start to talk to computers more, how can we be confident we're getting consistent results? Not always the same results, but consistent quality, integrity of data, fairness to customer, data protection. These are very real questions for those implementing these tools into processes. Everybody's excited about buying agents and not hiring people. I still see a great need for the human in the loop.
I want to bring it back to natural language. The question we kicked off with was, how do we feel natural language versus prompts is going to bring out the best in these systems? Do you have a take on where the line between a prompt that's spoken like a human versus Q4 results, variances now? What do you think is going to drive the best results?
That's a good question. It's a difficult one to answer. It depends. I've been involved in AI with regulated industries, particularly financial services, to some extent healthcare as well. These tools are not reliable enough there to be used without significant human intervention. When interacting with Gemini or ChatGPT, we put in the prompt to see the result. And if we are educated enough and paying attention enough to the output, we can determine its quality. But as that gets much faster through voice and we have less time, maybe the people we put to work on that are less educated in a particular process and outcomes and what good looks like. That question of reliability and risk of errors becomes greater. So the need to have capable humans in the loop becomes greater. It depends on the industry and the tasks. If we're trying to sell holidays, we're having a conversation with a computer about where it might be nice to go. Can the agent then go and actually book things for me? That's a much lower risk situation than managing my bank account or the results of my cancer scan. Companies need to think about this carefully. In many cases, regulations will prevent application of these, but even if it's booking a holiday, you don't want it to make a mistake. You want the car available on the correct date, the hotel, to the preferences you've set. So I think the capabilities are exciting, but it might move a little slower in reality than many of the vendors would have us think.
Yeah, as I think about the stories we read about the technology, one that comes to mind is using pleases and thank yous with LLMs. The insertion of a single word can change the attitude of the LLM and its outputs. These are probabilistic models. So one could imagine that any particular string of words will create a perhaps different presentational answer, but whether it actually presents a different conclusion is to be seen. This is going to force us to think carefully about how we use natural language, or force the platform players to be able to take stream of consciousness and turn that into reliable prompts that drive the software in its intended fashion. I want to go back to, Ken, something that came up in our last episode. You predicted last week that many SaaS leaders are going to have to rethink their platforms for the agentic age. I'm seeing some real reinvention and some bolt-on AI assistance. Ken, what's your take on how this is playing out so far?
I think the bolt-ons are a great way to get experience, what I like to call time over target. They don't require a complete rethinking of a product to start getting some traction. If you've got 100 million or more in revenue on a SaaS platform, it's not like you're just going to snap your fingers and change direction right away. You need some market confirmation that the things you'd like to build are going to be valuable. I think as a user organization and user individual, the copilots are probably less valuable than to the vendors themselves, right? This is the way they figure out how people want to engage with their product in new ways. But they don't seem tempting to me. Not in my experience. Depends on what that copilot is doing. If you're a user in an area where you have to do repetitive data entry, I guess a copilot could be very attractive. Copilots are, for the most part, an interim part of this migration to smarter software. There are probably going to be applications where they become more robust and do 60, 70, 80% of the work, and then ask for permission to complete a project or a process. I think that's what you're going to see next is this, let me help you with this document categorization project, and I'm going to confirm along the way that I've done it right. There are also going to be applications where the risk isn't as great, and we're going to let these processes rip and do a little QC and make sure they weren't stupid. I don't know if there is a definitive answer here. It's almost like human experience. Almost anything we can imagine as a way of working is going to be represented by co-pilots and semi-autonomous agents.
Ken, as you say that, it makes me think about the use cases in which people are using agents in their businesses right now. For example, Cursor or Replit or any number of these coding apps, the app is there to drive the software. It is to bridge the gap between a complex system and a user who might need help guides, support, learning, and education in order to use that product. Using copilots in those instances is a game changer. That's where vibe coding has ultimately come from. And you see these popping up more, like copilots as a way of improving product usage, depth, and retention. Then you've got a second set of agents, which I'll just throw out. Operator by OpenAI is a good example. Their job is to connect workflows across multiple systems. What's the purpose of that agent? Is sticking an agent on your knowledge base enough? Or is your desire to integrate your platform into a wider ecosystem of other platforms? Is that where your agent strategy comes in? Because those are very, very different ways of using a similar technology. And James, I'm curious to hear what you think.
Yeah, I think it's the data behind that agent as well. It's easy enough to stick on, bolt on ChatGPT or Gemini onto your existing SaaS platform and get time over target with minimal development change. But if you are building AI native and your whole data setup is engineered for those kinds of interaction that AI systems can have and start to apply in agentic ways, that's more towards what you were saying, Rob. It's a second order of benefits. That's a significant re-engineering of the underlying AI technology that creates those capabilities. So there's value in the bolt-on to explore my data in new ways and get more out of it. But I don't think it's a game changer. If I have a system where all the data is set up for AI to explore and work with it in that way, and then go off to carry out tasks and talk through APIs to other systems which are also set up that way, that's when things start to look very different.
I think we need some other language here. The copilot is the bolt-on. I'm using it almost in a pejorative sense. There's room to distinguish between things that are suggesting the next sentence in my email, which is of low value, and what you were describing as truly a co-worker, co-working with this intelligent agent, as opposed to it just trying to augment a little bit my experience. So maybe we need co-worker as our thought process, even though I don't think we're going to change the vernacular here on the podcast. But for the purpose of the
Mm.
podcast, co-working and being my partner in execution is where the added value comes, right?
I think that's where you start to see meaningful time and cost savings. An SDR is somebody operating multiple platforms, connecting the data on those together and driving a computer. There are other human skills that come along to it, but some of the synthetic co-worker platforms are designed to take away a lot of that kind of inter-system interactions because those are non-strategic work. I think we've all seen in the media this week the announcement from the Shopify CEO. There was a leaked memo. He recently told managers individuals will be evaluated on how well they operate AI. And indeed, when it comes to things like headcount and new spend, the question will be, how have you exhausted your options on AI before we start even considering bringing on a new human worker? A lot of the coverage has been about the replacement of humans. I have a slightly cynical view on this, which is that public companies have two audiences to take care of that many private companies don't. One is public market stakeholders. Look, no CEO leaks anything. SaaS CEOs now know any internal memo is probably going to make it to the media. And I would posit that Shopify is speaking to these two audiences, public market stakeholders and the next batch of Y Combinator startup founders to say, we are taking AI very seriously. Here are great signals as to why we should maintain our stock price. But if you are thinking of coming up behind us and re-platforming us as AI native, then we are also ready to take you on. Because those are signals every CEO is expected to put out to the market. I've got an AI plan, and this is not going to affect my business. If you're using public comms to make that point rather than software tools and releases, then perhaps that speaks to a gap between what Shopify is capable of doing today and what they need to do, which is get ready to become more AI native to fend off competitors. Ken, when you think about this from Shopify, does it raise questions about their ability to compete with AI natives, or do you think this is just part of the maturity curve that all SaaS companies will eventually go on?
That's interesting. I hadn't thought about it as revealing weakness before. I thought of it as more heartless point of view, not illogical. As a logical extension of I've got a couple thousand employees, I don't want 10% more. How do I coax my teams to align on that mission of not growing my headcount while growing the revenue and market share? So this seemed like a corrosive message. At the same time, it could be argued that as an employee, I want to be on the leading edge. I don't want to be a victim. I want to be a victor in the AI skills race, as long as it's not a race to the bottom. So, from my standpoint, it was more about culture of the organization, the experience of employees, and how do you put that kind of message in front of people? I guess my style would have been to encourage them to build their skill set for their own benefit as well as our company and finally our customers, which might be something, James, you may have heard from me recently. On the product front, I think Shopify is a dominant commerce platform just under the enterprise and down. I don't think Nike's going to build its store on Shopify, though. I think they're in a powerful position, and this might be the kind of posturing that, if there is a weakness in the product roadmap, would mask that for a time. I don't think that they're in a really exposed position, but it's not like I've done a deep dive on them. They seem dominant.
Mm.
That's my take. I think it's a cultural issue. Culture eats strategy for breakfast. That's what we used to say. And I'm going to say culture eats AI for breakfast. If you have two companies, they do very similar things, and one, the culture is much more supportive and healthy, and the other is much more militaristic and top down, and they have the same tech stack inside them, the one with greater is going to win. I just don't think you can beat people to success. You have to encourage and grow them to success.
James, companies are in a bind of managing all of their different stakeholders, and they've both got to satisfy investors who want to know that they've got a hand on things, but also very rapidly take their teams through what's going to feel like a very aggressive change management process. And
Mhm.
I wonder if you've got any ideas about how can a leader balance those things? What can a leader say to a team about AI that is not going to have a kind of toxic culture implication?
If you take that message at face value, it was blunt, but a call for upskilling with AI. That the quite famous quote, AI won't take your job, but a person using AI will, or some version of that, which was Richard Baldwin at the 2023 World Economic Forum Growth Summit. We see that happen. If you're able to use these tools effectively, you're a more valuable and efficient employee than somebody that can't. Every company boss has got to adjust to this. And Rob, to what you were saying earlier, the company bosses have got to signal to their investors that they are engineering their companies and their employee base that way. I know two perspectives on that. The long view is this is an industrial revolution. Machines take on new human skills. We're just seeing another wave of that. And the people that can work with those machines can adapt to that future. Probably not going to take away work because people figure out other things to do. It can be messy. What I've seen happen in practice and companies that I've worked for, building, selling AI, and the customers buying it, is that they haven't laid anybody off. Now, I've tended to be working mostly fintech. This doesn't represent all areas of the market, and things are moving very fast. The technology comes in, and people gain efficiencies and better outcomes and use existing teams more effectively. So it may mean less hiring, but it doesn't necessarily mean layoffs. And I think there's a message from the Shopify leader in that is to be able to stay with this company. We need you to use this technology effectively. That's a great transferable skill for any leader or employee.
White collar work across many industry verticals is going to be affected. I don't envy the leaders that have to message that to their teams while also messaging to external stakeholders and the best talent in the market come to us because we are AI forward is a very difficult message to also partner with. Stay with us because we are AI forward. And here is how we're going to support you, help you, invest in you. And I would say the Shopify CEO's note was a reality. Any staff member that was surprised probably had not read the tea leaves about their own culture because it's a very innovative. But I would have loved to have seen it. We care about our talent. Here are the things we're doing to protect and build our talent to be ready for these new technologies. I have led teams through major macroeconomic change. Balancing both of those things is incredibly hard, and protecting culture in the face of major disruption, and in particular, significant shareholder changes in what they need. That's tough. James, I want to kind of go back now to the impact of agents on buyers in particular. Let's think about some of these agents that work across different platforms. I wonder what you think it will take for enterprises to trust an agent that is as fallible or more so than a human in driving complex processes across systems. How do you think enterprises think about it? Are they comparing them to humans? Are they comparing them to perfection? What do you think that dynamic looks like?
People do compare AI to humans, most definitely. Humans are intolerant of the machine getting it wrong. It freaks people out when they see a small error rate by a computer. I've seen this with a company that I used to work in, serving the mortgage industry, handling application data and turning documents into data, and seeing 50 examples of the machine getting it wrong. And everybody was freaking out about this. And the total number of data points was thousands. We were talking about an error rate of a small fraction of a percent compared to 15, 20% by people, which the industry was entirely used to and comfortable with. So the fear factor around a machine getting it wrong is just higher. So what is it going
Why?
to take?
Why, for
Why?
all
What?
these smart people
Yeah.
focused on math, focused on metrics, are they
Mm,
wrong? That is a bad
mm.
decision. Why are they getting it wrong?
Why don't we have self-driving cars? A lot of the self-driving car technology is already good enough and safer than humans driving, but we don't trust it.
We've
We
got
don't
Waymo
trust
in
it.
a bunch of states. So I think we are starting to trust it.
People are adjusting, but do you see widespread trust in AI? I don't. Bit by bit, we start to trust the machines more once they've proven themselves to us. But we have a very high barrier to this. If you're in an enterprise and running an operation, you've established certain outcomes using human teams, makes no sense. It's interesting to see the intolerance for the smaller error rates that machines can deliver against humans.
I think we have a business opportunity here, gentlemen. If we create a standards body around the effectiveness of the execution of agentic AI, you could benchmark your
Mm,
application against that standard of performance. Then you could have different price levels for more high quality execution against an agreed standard. Now, that might not be possible in every scenario, but self-driving is a great example. How safe is it compared to the average taxi or Uber driver? You don't see that kind of institutional quality assessment that you do in other
mm,
areas of commercial endeavor. So that might be one way to address it, is to hold agents accountable, just like we hold humans accountable. Somebody's going to be looking at your work output and holding you accountable. James, you had 35 title errors over 10,000 transactions. That's a great job. But what if you had 300? Would it still be a great job? We don't have any external measure of quality of these things. As a buyer of this technology, how do you discern, was Oracle's agentic ERP better or worse than SAP's? Almost impossible to know. So maybe there's an opportunity in front of organizations to start characterizing and calibrating their agents and giving transparency into the results. If you're tasked with buying an agentic ERP for manufacturing, how do you know how good it's going to be? I've got Fred and Mary over here. They rarely, if ever, make a mistake. How do I know when I create an automated replacement for 80 or 90% of their work? What is that quality going to be like? That's one of the fears, and they're borne out when some small percentage of errors happen. I read a thing where a Waymo car was stuck going in circles. It's sensationalized. How often does an Uber driver play with his phone, hit the curb, and have a flat tire?
mm.
I bet it's more often.
Mm.
But it's not sensationalized.
If you take it out of life and death examples and you just think about performance as a fiduciary, right? If confirmation bias led you to spend more money per unit produced, your board would have a difficult conversation. You've got a cognitive bias encouraging you to choose suboptimal solutions that are costing us money. If we're in a world of 15% versus 1.5% error rates, and somebody is choosing a 10x worse solution over a cognitive bias, maybe it's time for us to start having a conversation. Self-driving cars are to some extent a trolley problem. Do you hit 6 school kids or do you hit a priest? That is a philosophical question that we have never been able to answer as humanity because it's an impossible question. But when we're talking about loan applications, yes, these can be life and death in extreme situations, but fundamentally they're revenue drivers. It's going to be really interesting. Last week I talked about quality as the primary is going to switch, and we're going to be willing to take 80% of the value or accuracy for 20% of the cost. I'm curious to see how outcomes play into the evaluation going forward.
Your logic is impeccable. Outperforms the human many times in many cases. But my experience of seeing these systems deployed is that's not how those buying and deploying them feel about
Mm,
it. I can't mount a logical argument against that. I've been on the side of the company selling the technology and arguing the case that, look, the machine's demonstrably,
mm,
factually better. I mean, Ken, you talking about having ways of measuring it. Side by side, real data, run in tests. The sensitivity to the machine getting it wrong is way higher. Maybe humans are kind of humans. It's just going to take us some time to adapt. We completely trust our dishwasher to do its job. But I'm in Mexico at the moment, and people here are suspicious of dishwashers. You just don't see them as much. So there is not as much trust in that very familiar machine that we all use every day. It's a matter of familiarity and experience with it. And over time, we can expect that to change.
So I think the dishwasher is a really cool analogy, and I'll tell you why. First of all, I think I do a better job than the dishwasher. I may not be as water or time efficient, but my quality is higher. But you bring up embodied versus disembodied, right? The software agent is a disembodied, unknowable. You can't monitor it in the same way as I can open the dishwasher after an hour and 10 minutes. I can see very quickly how well it did. When these agents are embodied, when I can sit side by side with a robot, it becomes more like a colleague and less like a mystery. Now, it might also be more threatening, right? Which is why a lot of these embodied humanoid robots are short to make them less threatening. The embodied agent, even if it doesn't need to be embodied, might increase the acceptance of these coworkers. They really are coworkers in a lot of ways. They may also be more capable of processing, integrating, and acting on our behalf. The human aspect, the organizational change management is what you were really talking about. Those things can make or break a project. I think it's going to be organizational change management. Maybe there'll be industry standards for quality of robotic operators that are needed in financial services transaction processing. We need to be very accurate. Core systems in finance live decades longer than you'd believe because they're known good. The known good process is of utmost importance. Could you imagine if Morgan Stanley said the AI drops the ball 4% of the time, we'll clean it up afterwards? That could be a competitive disadvantage. It's going to be that depends in terms of adoption.
What I'm hearing is that the way in which we sell software and we sell agents is going to have to evolve. We are going to have to be more tenacious. We are going to have to find new ways, not just to sit back and say, we'll allow the world to catch up with us, but I wonder how every salesperson becomes a therapist to explain not only that maybe there is a bias on the table, but how to overcome it. And that's our job to sell these products. And as more come out, it's an existential question. We cannot necessarily wait for the world to catch up. And we can't afford to ignore the reality that humans trust humans in different ways. This is one to watch as AI comes. How does it change buyer behavior and what can we do to influence that further? I want to bring us on to our last topic before we get to predictions, which is one of my favorite parts of our show each week. There was a LinkedIn or an X comment from Greg Eisenberg of Late Checkout. Now, he does a lot of talking about the future of SaaS. And one of the things that he talked about was in relation to agents, two futures for SaaS companies. Many are becoming agent owners of themselves and operating with the customer, thinking of them as owning the customer relationship and owning the customer in many ways. And then a second group of software providers that will become invisible software. They will be the APIs that agents talk to get things done. A simple consumer example is OpenTable. I used to go to restaurant websites to book a reservation, and I went to OpenTable, and now I never go to a restaurant landing page ever again. If I'm going to Operator by OpenAI, which is capable of making restaurant reservations, it now goes directly to the aggregator itself, OpenTable, operates all of its features to get me a reservation. If I ask OpenAI, I've got a reservation in the table that I want, at the restaurant that I want, at the time that I want. And I think to myself, will I ever go to OpenTable again? For limited use cases, maybe, discoverability, but for functional work, probably never again. I can see this paradigm playing out with many SaaS platforms. If you're asking what are the Q4 reports, do you need to go into retool? Maybe you don't need to go into retool as many times, so you start consolidating licenses. I'm curious about what agents do to the primary relationship between a customer and a SaaS provider. And secondarily, is being invisible software a bad thing? James, I'll start with you.
I think it comes down to the liability. Booking the restaurant using SaaS tools, and if that can be any kind of automated through agents that are using those SaaS tools and interact with OpenTable, I'll just let it talk to the computer and let it do that. How much does it matter to me that I get a good interaction with that restaurant? So I sometimes find myself wanting to go to the restaurant's own website and do the booking myself because I want to have a certain understanding about that restaurant. And I also know if I book directly with the restaurant, they're not having to pay a fee to Open Table. So I get better treatment, terms, a better conversation if something goes wrong. I see that with hotel bookings. There's systems and incentives that are built into them have an effect on all of this. As we trust the machine, what's really going on there? That's one side of it. Then Ken used Morgan Stanley as an example. And the AI getting it wrong 4% of the time, and we'll use people to clear up the difference. That's what the AI systems of all the different AI fintech companies I've worked with are doing. We'll put the AI in. It's going to be more accurate than the people, but it's going to fail probably something like 4 or 5% of the time. And we're going to fill in that gap using people. The challenge is how do we communicate around that to make that seem reasonable? So I think that we'll have invisible software that is good enough for most of the time. We can stitch up the gaps with people. But in instances where we care more about the relationship that we have, so with the restaurant to the hotel, or the outcome of a process, the visibility we need, we might choose to have that visibility.
Do you think that's like 90-10? There are things that absolutely cannot fail and things that nobody cares about, right? The question for SaaS providers is going to be, how many seats have I got? How much can I charge for this? What's your opinion on how much of, say, 100 seats is going to fall into the most extreme version of, I must get this right, I want better turn? I wonder what you think the breadth of that looks like. Do you have a sense of, is this 50-50? Is this like 80% of cases people are happy to automate? What does your gut tell you?
I think this is where you start to see outcome-based pricing, usage-based pricing compared to seat-based pricing becoming a consideration. And so in a situation where you're still going to need a fair amount of human interaction along the process, seats can still make sense. If that's going away, we need different ways of pricing it. It's going to depend what your software does and the markets you're selling into and some of all the other effects we've been talking about. But you're right, it's going to look different for different types of SaaS companies.
Ken, what do you think?
There's been about if you have API access and you're revealing that to agents, your pricing power goes away. I think the opposite. If you're accessing me by API, I know every time you request work. I can build pricing against that because I know what work I'm doing for you and what value you should be getting as a transfer, an expectation of value. So it's going to take some work because customers are not used to paying much for an API call. Sometimes a platform will have an infinitesimal API call charge. But once API calls are unit of work, then we have to start charging for unit of work. Pricing is up in the air. I think it's going to be one of the big consequences, and probably margin up in the air. Being a broker is less of a value proposition than owning the transaction cycle. We brought up Open Table. They own the transaction cycle. Almost everything they process, they are the beginning, middle, and end of the transaction. If they become just a broker and they don't own the audience, they lose the first party data. They lose a lot of things in being relegated to the broker role. So I think it's going to depend on your business model. On the other hand, for Open Table, there's a cost of audience acquisition. If they can focus on being the restaurant service provider, maybe that's a more efficient business model and they'll have benefits. Part of the SWOT analysis is some of your top line might be threatened as a result of being relegated to a broker role, but maybe it's less expensive to be in business as a result, especially if you're still that important to the restaurant. Open Table, Toast, all these different things. They do a lot more than just the booking, depending on which vendor we're talking about. So maybe they get a cleaner value prop. It's a big depends answer.
It's really interesting. Like, I don't love any company that has an API called by another platform that I care about. It's really difficult to love a company that provides APIs into a company you engage with day to day. And my hunch is that this is going to change the way in which we think about how to compete. Your dashboards doesn't matter. User experience probably doesn't matter. These big domains of differentiation, I think, are going to start to push folks that fall into the invisible software category into commoditization. What I like about Open Table is it sends me a little WhatsApp. And compared to the restaurant, I can achieve the same functional thing, but because they own the customer relationship, they have more ways to surprise and delight. And I think companies that fall into the realms of just being an API provider need to have a hard look at their business and say, do I need this design team? Do I need this user experience team? Do I need a marketplace of restaurants at all? Or do I go to transaction processing for your restaurant bill? And I think it just occupies an incredibly different space in the mind of consumer. And for a new software provider like myself, that's a great opportunity, which is how can I provide that API call at a cheaper price? In the commoditization world, if you're invisible software, there's no customer loyalty or love, then the agent is probably going to be operating on instructions like find me the cheapest way of doing this thing. These are the real questions that many SaaS providers are going to want to be asking themselves as they start to see for their particular industry and use case, what is happening to players like me, and how do I compete in a world where most cannot afford the investment in owning the agentic layer? It's complex, it's multi-step, it's going to be a real battle. And if you're falling into the realms of invisible software, it's going to be how do you protect your margin by drastically reducing the scope of what value looks like for your customers. These are going to be interesting things to pull on as we see more real examples hit the market. Ken, I'm going to hand over to you. This has been a great discussion, but as always, we're on to predictions. So I'll let you take it from here.
I think I'd have to go back to the prediction around what is an agent, what is a coworker. So I'm going to say the coworker is king. The idea that I can engage with and benefit from a relationship with a digital coworker is where there's a lot of opportunity. And I think this idea of calibration of that skill level also is something that might actually happen. That's my prediction. Calibration of AI effectiveness.
James, predictions for this week?
When you look at the history of technological revolutions, they are rarely binary. We don't have a clean before and after. We end up with a mixture. Some of the old gets pushed out, but often doesn't completely go away as the new comes in. I think it's going to be much the same with this era of AI and agentic AI. There's going to be many instances where we're very happy to the AI take care of it. And sometimes we're not. Sometimes we want to do it for ourselves. And in between there, there'll be areas of gray where we want to be able to be involved with the computer. And I want to go back to the dishwasher. How many times have you thought, I'd love to see what's going on inside the dishwasher? Why can't the dishwasher have a glass door? There's some reasons why it doesn't. That's not important. We want to see what's going on inside the machine and how things are working in many cases. And so sometimes, yeah, we can set it and forget it. Sometimes we'll want to do it ourselves. Sometimes it's going to be in between.
And what was your prediction?
Agents are coming, but it's going to be non-binary. We'll see a great expansion in the use of those, but it will not be total.
Yeah, that feels right. And there's a lot of it depends and what's your...
Yeah, those dependencies are really important. If you're a software company, what is your niche? What is your place in that broad ecosystem? You might want to take a narrow part and focus on that. But for the broader business and economy, we see a greater shift into the AI, but some of the old is going to stick around too.
Thank you, James. Last week, I predicted agent optimization is going to be the future of discoverability. This week, I want to talk about voice, and we're going to have a whole show on voice next week. I think voice is going to drive the agentic revolution across a majority of consumer use cases and start getting into SaaS. What does that mean? Agents will begin to be optimized for tasks that can be described simply in a short conversation. I write prompts that are this big right now, but I suspect as we get closer and closer to being able to speak to computers, we are going to then find ourselves influenced in terms of the things that we can ask for and how we engage with them. I'm going to predict that there is going to be a large aha moment around voice this year in 2025. I'm going to hold myself to a very specific prediction here. And I'm also going to predict that it will not be Siri. Some new player is going to come out and change the game in terms of how consumers and buyers and people across the world think about the role of voice in AI. And I think Siri is going to miss the boat on this one. I think it's going to be a new player that's going to come out with a unique twist on how to use voice plus agentic AI to solve real meaningful problems for consumers.
I want another bite at the apple now. So, building on this vision you have for voice, I think it's also going to be the year where it's a conversation, where your AI will remember what you talked about previously. Right now, when you engage by voice or keyboard, it's like you're starting over. It's like Groundhog Day, right? Every interaction is almost a new thing unless it's right in the thread. You can't go to ChatGPT and say, hey, remember last Wednesday we talked about building a 3-story apartment building? It's like, sorry. So that I think continuity of conversation is going to become really important this year, and that'll be a breakout.
You'll be pleased to see OpenAI pushed out a major memory enhancement that will make that true as of yesterday. Memory's been a big constraint, and OpenAI pushed out an update late last night, which will be 10th of April for listeners. It can now remember many of your conversations first time round. I've not tried it yet because I am also finding it exhausting to have to say the same things, but we're seeing big developments in memory that should make the utility increase 100-fold.
This has been a really great conversation. For those of you loyal listeners to the SaaS Backwards podcast, you'll recognize this is at least twice as long as the usual episode, even after we've edited it down. For that, I apologize, but I hope you'll also be appreciative of the depth of this conversation. Rob Curtis, building applications in his venture studio, Stand Up Hero, is about to come out. And I think by the time this is published, Stand Up Hero will be available. And that's HIRO. James Ollerenshaw, technology marketing executive AI guy multiple times over, AI marketing lead multiple times over. Thank you so much. If you haven't subscribed already to the podcast, please do so wherever podcasts are distributed. And also, you can get the podcast on YouTube. Just search SaaS Backwards. Hey, Rob, if people want to reach you, how can they do that?
I encourage everyone to go to www.standuphero.com. There are plenty of ways to get a hold of me from there, to speak to some of our agents. And you can also reach me on LinkedIn, Rob Curtis.
My demand generation agency for software as a service companies is Austin Lawrence. You can reach us at austinlawrence.com. I'm on LinkedIn/in/Ken Lempit. And thanks everyone for staying with us. And we'll see you next time when we get deep into voice agentic AI.